We're going to go ahead and get started. We're about 3 or 4 minutes in. I'd like to thank you for joining. I have my lovely host here, my wife, Tiffany Smith. She'll be in the chat answering questions. So what we want to do is we're going to hold all the questions because we'll have a Q&A session after we're done. So make sure you write down your questions because I know we will forget, or you can stick them in the chat. You can do either or. So as they come, if you want to type them in the chat, or we'll take everybody off mute and we'll ask, you can ask some questions after we're done so we can get through the session so we're not holding up everybody. So I'll go ahead and get started. Welcome to Mastering Notes Like a Pro, where paper profits is real freedom. So you're going to learn just in our short webinar how to earn passive income. And when I say passive income, it's where you're not actually doing a lot of legwork. Like, I don't know if any of you guys are landlords or you have rental property. This type of income is true passive income where you're not out fixing toilets and fixing roofs and all that tedious stuff that a landlord does. So a little bit about me, passive investor. I do note investing. I do hard money. Hard money, I do, if you're not familiar with hard money, I loan money to fix and flippers. So if you've heard of the term hard money, that's what that is. Short-term lender, same thing. I also loan money for construction loans, second lien position loans. I do that as well. And I also do owner financing. I originate owner financing notes, and we'll get into that, what owner financing is. Okay, here's the disclaimer. I am not a certified financial advisor, U.S. securities dealer, or investment advisors. I'm not a business consultant or acting in the capacity of a financial intermediary who provides advice to private individuals about business matters. So this is for educational entertainment purposes only. Investing is a risk. So please know that. So here's the agenda. We'll go through mastering notes like a pro. We'll go through what a note is, note basics, think like a bank. We'll talk about seller owner finance, rentals versus paper, case studies, and how you can be a note investor. So type in the chat, does everybody know what a note is? Or should I say, don't know what a note is? Put in yes or no. That way I'll have an idea of who understands the note business. Okay, all right, cool. All right, so what is a note? A note is a promise to pay. It's a debt instrument that makes you a lender and not a landlord. When you own a note, you're collecting payments, you're not fixing toilets, you're playing the bank's game. Okay, so this next scenario should give you guys a good idea of how it works. So here's a traditional process. If you as a borrower, everybody probably has owned a home or has owned or knows somebody that owns a home. So if you have a home right now and you're making payments, just put yes in the chat. If not, just put no. But when you get a traditional note for your house or you want to buy a house, what you do, you go to the bank and you fill out an application and you get approved for a loan. So let's just assume you're approved for the loan. The bank will give you that money to pay off the seller of the house that you're wanting. And then after that, you got to start making monthly payments to that bank, right? So the bank, all it does is loan you the money and then you pay that stated sum, which is a note, over the course of 10 years, 20 years, 30 years, or whatever, until you own the house. And after you own the house, same thing that we do as note investors. Same thing. There's no difference. They're just institutional banks, and I'm just a regular LLC investor, and I can do the same thing. I can buy existing notes. And when I say buy existing notes that I've already created, How many people, just type yes in the chat, if you ever had your house loan sold? So you go to one bank and then you get a letter and say, hey, now you need to start making payments to bank B. Same thing. So when we buy notes, because I can buy notes from other individuals, from banks and all of that, I buy that note and you start making payments to me. It's just as simple as that. That's true mailbox money, because if you think about it, guys, with a bank doesn't do anything but collect your payments. You don't call the bank and say, hey, my roof is leaking. You don't call the bank and say, hey, my toilet's broke. All you do is write that check. And that's the same thing we do as note investors. So, types of paper. And these are the three different types of papers that we deal with as note investors. So you have a note and deed of trust, which is what the average homeowner has. If you have the homeowner, you go to the bank, you get a note and a deed of trust with your house note. So we can buy and sell those as well. And that's what usually the average homeowner has. When you go to the bank, they will give you a note and deed of trust. And these are some of the things that we'll cover in different courses. Also, contract for deed. A lot of investors will do contract for deeds. And what this is just what it says. You, as the note owner, can do a contract to a borrower for the deed. So they don't actually own the property. They have what they call equitable interest in the property. So let's say, for example, this contract for deed is over 10 years and they pay you, let's say, $300 or $400 every month, and they pay that. They're building up equitable interest, but they don't own the property. It's still in your name. And at the end, after they fulfill that contract, they get the deed. Hence the name contract for deed. And these borrowers get what they call equitable interest in the property. So as they're paying, they're gaining, they're actually buying down their note, but they don't own the property. And next paper is like a lease option. It's a lease option. Lease options is just a little bit less ownership for the borrower. They have to where they fill out, it's literally like a rental contract, but you can set up these contracts. Let's say if they're paying, let's say $1,000 a month, this lease option will give them a portion of that rent payment to go towards the house that they're wanting to buy. Okay, so say they are paying $1,500 rent and the contract is set up for them to pay $100 towards that final note that they want to buy the house. It's an option. So at the end of that, say 12-month lease, and let's say they have $100 out of the $1,500 after the 12 months, they built up $1,200 to go towards the payment of that house if they decide to buy it. So at the end of the term, me as the note owner can say, okay, now you have the option to buy this house. Now we're giving you an X amount dollar of credit to go towards the house. So if it's $100,000 house and they built up, let's say 2 years from the lease option at $100 a month, and they've built up $2,400 off the 100,000. So they can buy whatever let's say, what is that, 96,000 400. My math may be wrong, but that is the final price that they have a choice to buy. Now at the end, for the lease options, they have to go and get owner financing from the bank. As a note buyer, we can switch them over for a contract for deed if they're good payers. So each of these types of paper, when you get like a note and deed of trust, most likely the borrower has better credit. They have less debt to income. And as you go down with the contract for deed, they have, less credit scores. So the better credit you have, the stronger position you have as a borrower to get into one of these types of paper. So think like a bank. So you as a note investor, myself as a note investor, just remember, we don't own the asset, we just control it. So as a note investor, I have notes, but I don't own the property. I just own the paper. and I control that property just like a bank. They don't own your property. They don't own your house. All you do is pay, but they do. The banks control it because if you don't pay, they can take it back. So always be in the mindset and becoming a note investor. What would the real bank do if it was my, my house? If I stopped paying the payment, they're going to send me a note and say, "Hey, Smitty, you need to start paying your house payment or we're going to take your house." When you're thinking like a bank, you can buy anywhere. You don't have to have that property, that asset in the same backyard. Now, if you're a note investor that wants to have the same asset, the assets in your backyard, like I'm from here from Kansas City, but I have notes in Wisconsin, I have notes in Texas, I have, notes in different spots because I'm thinking like a bank. I don't have to have my hands or have my eyes visually on that property. Also, thinking like a bank mitigates your risk. As I said before, investing is a risk. Whether you're investing in stocks, bonds, I mean, whatever, it's all a risk. But the good thing about notes is that that investment is backed by that real estate. So we mitigate our risk with our underwritings. If you notice when you go into a bank, they have all of this stuff that they want from you. They want your kidney, they want your first child, they want you to fill all this paperwork out when you go out, when you fill out that paperwork. They're mitigating their risk with underwriting. So we do the same thing. When we look at our borrowers, we want them to have good pay history. We want them to have good debt to income ratio. So we mitigate our risk for the underwriting. And again, like I said, investments backed by real estate. One of the things I like about notes is that we don't have to worry about things going up and down like the stock market. So if the stock market goes up and down, what do? Either you panic and you sell, or maybe you're a smart investor. When it goes down, you buy, but you have no control over that. With a note investor, we have that property that's backed by that, but the paper that's backed by the real estate. So if something happens to where the borrower is not paying and we may have to take alternative actions, we know that we have that property there. So I'm sure some of you guys were talking about or thinking about, what if they don't pay? And sometimes that happens. Again, like I said in the previous slide, we always have that property that's backed by that real estate. So one of the things that we do is we can contact that borrower and say, "Hey, what can we do to get you back to pay?" Out some kind of workout to where, you may pay less payments over time. And that's the beauty of being a note investor versus like a traditional bank. You're not going to be able to go in the bank and say, "Hey, I can't pay my note for the next 6 months. Can you lessen it for me? Like take $300 off." You can't do that. But with us as note investors, we can do that because remember that people live in these houses, their families, their kids, their lives, people live in these houses. So, when you get into this business, you don't really want to take back properties because these are families. And if that doesn't work, you can sell it. That's another exit strategy. I've been into situations to where I've had to go through foreclosure to where I couldn't reach the borrower. They would not return my phone call. So the last process is going through a foreclosure to get that property back. Yeah, so foreclose and take back the property. That's kind of one of the last options. So here's a case study. This was my very first note that I acquired in 2020. I actually started this in 2019. Started really looking into doing this because we were doing rental properties, and I was like, man, I don't feel like doing all this tenant repairs and all this other stuff. So I met this lady, and she was talking about notes, and that's really took me off in 2019. So I bought my first one in right at the midst of COVID. Bought my first note in February of 2020, and it's in Mount Sterling, Wisconsin. I think it's probably got 1,000 people in this area. But the unpaid balance on this, that's what the borrower owes, was $41,000 and 41,000 and some change. So the monthly P&I stands for principal and interest. That's what the borrower pays. And then the monthly T&I, that's the taxes insurance. That's the escrow. So you guys that own houses, you should know what your P&I and what your T&I is, which totals your monthly note. And they were paying an interest of 10%. Now, out of that money, I would get the 371 a month mailbox money because I get the monthly P&I. The other part, the T&I, goes towards taxes insurance. So their term was 316 months, 26 years. So I purchased that note for 33,000 and some change. And I purchased it in my IRA. So just a tip that you guys, if you have like old 401ks that, you had a job and you're not working there anymore, you can convert those over to what they call self-directed IRAs. And we can definitely go into that. I have a consultation. We'll go through that later on, and I can show you how to purchase notes through your IRA. So my return on this was 12.5%. Now, if I was to carry this full term over the 26 years, I would have got paid out 117,000 out of my $33,000 investment. So my exit strategy when I first bought this was I was going to hold it term, just collect the monthly payments. It was just going to build up in my IRA, build up in my IRA. And after they paid it off, I would have that money sitting in there. I could have held it for a little bit and then recapitalized and sold it and bought something else. And again, we talked about if they didn't pay, I could have foreclosed on this. And this house at the time when I purchased it, purchased the note, the house was worth about $100,000. I would have been able to get that property back and make an investment or have an extra strategy to where I could sell it. I could create another note with it. The exit strategies are endless. But there's an extra strategy on this note that I did not include that just happened recently. They got a payout. They did a payoff. They actually, someone bought the house from them to where I got a full payoff. So at that time they owed, I still think that they owed like $40,000. So when they paid it off, I got a check for $40,000 back into my IRA. So that's the beauty of buying notes. And you always want to buy under what the unpaid balance is. And the reason why you want to do that, say you paid the exact price, what we call a note investing industry par. So say I would have paid $41,300 for this. And say the next day they might have hit the lottery or they refinanced the house. I wouldn't have made any money. Actually, I would have lost money because it cost a little bit to purchase notes. So I would have lost. So you always want to buy under what the unpaid balance is. You guys following me? Put yes in the chat or put no in the chat. If you put no in the chat, put your questions in. So now we're going to switch over to seller and owner financing. Now this one is a little different than buying a note. This one's where you're actually creating your own note with an existing or a property that you may have. The seller acts as the lender, allowing the buyer to make installment payments directly to the seller of the property instead of getting a traditional loan. So these are the ones, I mean, you can create them wherever you are, but my preference, I like to create these in my own backyard because I usually have properties already established where you find buyers and sellers. I'm sorry, where you find buyers that you can put into these properties. And the good thing about owner financing is we're less stringent than a bank. So being an owner of a property, say you've got a rental and you're just sick and tired of tenants and you're just like, hey, I'm tired of going to fix stuff. You can take that existing property that you have and turn it into a owner finance property to where we had talked about contract for deeds and note and deed of trust. You can create these notes to a property that you have. So take those rentals and convert them over into owner financing to where they are responsible for all the repairs. It's all about how you write these up in the contract. So if you got a house, maybe you are a beneficiary of a house. Somebody left your house and maybe you have it right now and you don't know what to do with it. Or maybe you have a renter in it and you didn't want to rent it. You thought you rented it, you thought you wanted to be a landlord and you didn't. You can convert those over too. Or maybe if you're moving and you're wanting to keep that house for whatever reason, you can convert that property over into an owner finance property. And the conditions are, they must be in livable conditions. You just can't put anybody in a house that is not functional. Good roof, good kitchen, good foundation, all that stuff to where it's move-in ready. And also you can, as a note investor, you can write into the contracts where you can do somewhat of a fixer upper to where it's still in livable condition, but you make an agreement with the borrower. Say you run into someone that's a handyman or a handy woman that say, okay, I'll take this, we'll do the owner financing, but I'm gonna go ahead and fix up this kitchen while I'm living in it. So you can do that as well. Compliance. It's very important that you'll follow the laws and the rules as far as doing owner financing. And that's something we can talk about when we have Q&A. And clean title, of course. So if you're doing any type of owner financing, you must have a clean title because it's at the time that they're wanting to buy it, that title has to be clean in order to make that transaction when they fully pay that house off. Same thing, seller finance paper, just like as a note buyer, making a deed of trust, a note and deed of trust, contract for deeds, lease option. Now, all of these types of paper are sellable. So if you decided you did owner financing and you're like, you know what, this is cool, but I think I want to get my money out of it. You can sell off all of these different types of paper. So if you created an owner financing with all these three different types of paper, you can sell off these notes to other note investors. Again, owner finance benefits for the seller, no tenants, no repairs. You also can collect a large down payment, and we'll talk about that. Long-term mailbox money. You have the option to adjust the sales price outside of what the market says. You can charge a higher interest rate. Also for the buyer, easier for them to qualify, no bank stringent loans that you have to go through. You can work out flexible monthly payments. There's less paperwork when you're doing owner financing, almost close to none, but lower closing costs, and no PMI. PMI is the private mortgage insurance that traditional banks charge you on your loan. So here's my rental versus note comparison. So if any of you guys are rentals, you can see that if you have a rental, you're paying taxes, you're paying insurance. If you want property management, you're paying property management. You're also paying for repairs. As a note holder, you can still have that same note income to where they're paying taxes, insurance, and escrow. You don't do property management because they are responsible for all of that, payers as well. So that's the beauty of being a note buyer. Oh, and also down payment. So I'm gonna give you guys an example when I say down payment. So if you create a note, just like a bank will say, okay, I want you to pay, 3%, 5%, or whatever. But if you're creating owner financing, you can get up to 10 and 20% or even more on these notes. So if you've got a house, let's use this example for 210K, you can require 10% down. You can require 20% down. And believe me, there are people that are out there that don't qualify for bank loans that have money. So that 10% down payment is $21,000 or $42,000 if you request 20% down. That's a good chunk of change that you can collect that does not go back to the borrower after they do their down payment. So think of it as a bank. If I go and buy a house from a bank and you decide to give them $10,000 down, and you end up foreclosing, they're not going to give you that money back. That goes towards your payment, and you get that down payment as a note investor. This one's for you, Ash. I work with Ashley on this one. This is an owner finance property that I just did this year, and purchase price was 50K, no money out of the pocket, and we can go through that, not on today's course, but we have a course that we talk about how to purchase with no money down. And we already had an existing tenant that was paying the lease option. So I actually bought this lease option from another note investor. So 50K purchase, tenant's paying 1050 a month, taxes, insurance, 200. And remember I had talked about the equity that the tenant had? They get $197 of equity if they decide to pay that. Now, one of the conditions is that if they're late on their payments, that equity is not granted to them. So any late payments, which is written in the contract, is not granted to them. So at the end of their 12 months, they have the option to buy this for 110,000, and the tenant 100% responsible for their repairs. So they would, at the end of 12 months, whatever the 12 months time, 197, but if it was, 200, it would be $2,400. So they would take the $2,400 off the 110 with their option to buy, granted that they paid every month on time. And that's a way that, for one, as a borrower, you can improve your credit. It's an easier way to purchase. You can take that 12-month term as a borrower to increase your credit, to get your debt to income ratio down to where if you wanted to buy through traditional bank financing, you can. So that's a good thing also about being an investor. You are helping these people better rate for banks. Again, sell the extra strategy, sell at the end of the lease term if they wanted to, or I can continue with the lease option, or I can sell the property with the tenant or the landlord. Okay. How to seller and owner finance. One, get your education. If you currently are planning to own a property, make sure the property is in good livable condition, move in ready, and make sure you have a clean title. So if you're wanting to do that, that is an option. So we have actually gone kind of towards the end of the course, and I wanted to show you that I offer a Mastering Notes Like a Pro basic course. And here are some of the things that we cover in our basic course. We go over performing notes, non-performing notes. We teach you guys how to do due diligence. We also teach you how to do a buy box. And what that buy box is as a note investor, you have to have a buy box, whatever that is, whether you have $5,000 or you have $10 million, you need to know what your buy box is. Just like if you're going out to buy a house, your buy box is a certain number. You can afford a $1 million house or you can afford a $200,000 house. Same thing when you're buying notes. And we also show you how to analyze and calculate deals, how to buy and broker with no money. We go through tape reviews. We talk about servicing. We talk about exit strategies, and we go over collateral reviews, and it's a full recorded session. And we also offer a master course. This is a live course. It's not a recorded session. Anybody that's wanting to really seriously get into note investing, this master course is, like I said, it's a live course, and we go heavily into learning how to be a note investor, and those courses available for you. Now that the basic course right now is $49, and then the master course is $497 for $19.97. But those are available to you. My beautiful wife has put those in the link if you guys are interested. There's QR codes there as well. And also for the owner financing, I will do consulting if anybody is interested in doing the owner financing. This will be a one-on-one course. So if you want to schedule a time with me, there is the calendar invite and you can schedule a consultation. And last but not least, I have the 1 hour investor. And if any of you guys are thinking about investing, but you say, Smitty, I don't want to do all that. I don't want to become a note investor. I don't want to do owner finance and I don't have a property. I don't want to do any of that. But I do want to earn some passive income. I want some mailbox money. And this is where the 1 hour investor comes in. You're completely hands off. You understand the deal, but you don't management. You get true mailbox money. You skip all the learning curves that we just talked about when we have a partner structure where you invest and we operate to where you hop on the call with me, probably 1 hour, maybe 2 hours a month, depending on the level of interest that you want to do. And we set up to where I do all the heavy lifting. We get you notes and you start collecting that mailbox money. So those all three are in the chat if you guys are interested. And now I'm going to open it up for Q&A. All right. So we'll start with Cliff. It says, what service do you use for your underwriting? That's an excellent question. Investigating your borrower. They have this companies that you give this information to. It's almost like doing a sales application for a rental application for a tenant. They have these companies to where you give them the information and they will go out to these companies and they'll do all the underwriting for you. Or you can self underwrite depending on, what level that you want to go into your note. There is a self level of underwriting where you can do some checks. And then there's a different level to where you can actually get that borrower certified to makes your note more valuable if you want to sell it. So there's two ways of underwriting, using a third party or you can self underwrite, I'm sorry.
I appreciate that. That's kind of what I was thinking was the option. And I'm listening and taking notes. Can I add to that? Can I ask one more question while I have
Sure.
you here? So you indicated in your presentation utilization of your IRA,
Hmm.
um, taking and using that as a financial tool.
Hmm.
Of course, I'm of age where I can deduct money from my IRA, but
Hmm.
that money is also taxed as income. So you you understand the liability or liability of utilization of those funds because you're going to have to pay taxes on them and in order to make these transactions and I think that there's no way around that if I'm correct.
Yeah, so the way it works is that if you have a IRA, there's companies that will do what they call self-directed IRA to where the whole complete entire purchase is done in the IRA and you do not take the money out. So for example, I have notes that are like the one that I showed you that was in my IRA. That company will purchase the note for you and they will do the transactions inside the IRA. So when the monthly payments come in, they come in the IRA. Now, granted, when you take it out, you're going to have to pay taxes on it, but you don't have to take it out to purchase. It's only when you take it out to utilize it. So the example that I was giving you, that was all done in my IRA. So I've been collecting money just like, if you'd have a Charles Schwab account and you see your stocks growing, they're growing inside of that 401k. Same thing as, purchasing notes. They grow inside. And once you decide to take the money out, yes, you have to pay taxes on it.
And so it's basically just like another method of investing within the IRA. You're not
Correct.
buying
That is
bonds, you're not
100%.
buying stocks. You're doing a note transaction.
Exactly.
Okay.
100% correct. How do you negotiate a purchase price? Is that question for owner financing or is that from the notes? So if you're talking about notes, you negotiate a purchase price with the actual the seller of the note. You get that information. They will just like a house. I'll compare it to a house. You have a house that you're wanting to go buy, and maybe that house is not in pristine condition. Maybe it's not like the ones you may see on the market. Same thing with notes. You go in and you look at that note and you analyze the paper that's the what they call the collateral file inside the note, and you negotiate it based upon how is that borrower paying? Are they paying every single month, or are they spotty paying? They may pay uh, on the first, and then they may skip around and pay on the fifth, and that decreases the value of the note. So we as note investors, and you can learn this in our course, is how to bid on these notes based on the collateral file, the paper that you get. And once you do that bidding, you say to the actual seller of the note, I would like to pay this price because here's the things that are that's messed up with the note, should I say, that doesn't make it a 100% grade A note. Or just like a house, if it's in pristine condition where they're paying every month, the borrower's good underwriting, no issues whatsoever, you're going to pay top grade for it. So that's kind of how you negotiate it. Same thing with the house. Hope I answered that question for you.
Yep. Thanks, Vinny.
Okay, Stace, when you sell it off, does the tenant have to vacate? No. So when you sell your notes, just like I was saying with the notes, you get that letter in the mail saying, hey, you need to start paying this bank now, because essentially they're not a tenant. They are a actual borrower. They don't have a rental contract. They are borrowers. They have purchased this house, and once you sell it off, you are selling off the borrower plus the note, because essentially they're not tenants.
So it's just like if I, like for my clients, when they purchase a home, their lender may only hold the note for about 30 days and then they sell it off. Same
Yes.
concept?
Yes, same thing.
Okay.
Same thing. Here's the reason why they sell those off, just so you guys know. So when you get like some of these small banks will do the loan for you, and then 30 days they sell it off. And the reason why they do that, the only thing they want to do is collect that origination money. The fees that they charge you to originate the loan, all the fees that they charge you to do, but they can't hold that, loan amount in their small bank. So they sell it to the big banks. They originate the loan to you, and then they sell them off and just collect the origination money and the fees. Do you use an attorney to draft contracts? Yes and no. I suggest that you always, 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 always use an attorney to draft your contracts. The reason why I don't always do it, because I've been doing it for a little bit, and I will, utilize some of my skill set to draft the contracts up, but always use an attorney to draft your contracts. For your own properties, do they have to be owned free and clear before creating a note? And I know you mentioned first lien holders, but yeah. So good question. Very good question. You don't have to have a free and clear property to do a contract for deed. Because essentially with contract for deed, if you wanted to own or finance your property, say you are carrying debt on that property, but you want to do a contract for deed where you don't have to do the repairs and all of that. So you can have that contract for deed in place, because essentially with a contract for deed, you still own the property. Now you have to be careful when you're doing this, is that you are able to, if the seller, if the buyer pays off that contract for deed, you have the money to cover the loan that you owe. So you have to make sure you structure that note to where when that payoff comes, if they pay it off, that you're not underwater on your underlying debt that you have on the property. Extensively go through that on the owner financing. It will be a consultant course. We show you how to create that whole note for if you have a property with a lien on it, do a contract for deed. Okay, where do you find these notes? Are you directly connected with the bank? Yes. So we're connected with banks. There are Facebook groups. There are conventions that we have throughout the year of note investors. Once you get into this space, you realize it's a whole world of note investors that do the same thing. So there are meetups, just like you have, Jamia, with your group. You got tons of followers that you have. Same thing that they have in the note industry. Um, Probably 5 to 6 conferences that go on every single year in the note conference, to where you meet up note investors, you trade notes from those guys, you learn stuff. And these conferences talk about attorneys and legal stuff and all that. And you can also buy notes from banks. You can buy from individuals. You can buy them from hedge funds. And once you get into this, if you decide you guys want to get into this and take these courses, we connect you with all of that. So I'm gonna get back to the questions. Do you buy homes from tax auctions and create notes? Yes, you can. That is one of the most inexpensive ways that you can do it. If you buy them from tax auction and get them ready, that is one of the best options. That's a great question. So you can buy homes from there. Beware of the laws in your state, the redemption laws that I know you're familiar with the redemption laws that you have to, hold on to the house, or if they decide to come back and get that property. But yeah, but you can do that.
Hey, Smitty. Hey, one question that what's a realistic look at, like, how quickly a person could start investing and to like double money, or what's a realistic look at that?
You can start right now. As a note investor, you don't have to have any money to get started. You can actually broker notes. I've brokered notes before. I don't know if Jeff is still on. I brokered notes with him. You can, just like a wholesaler, um, you can find buyers, you can find sellers, connect them to, and make a profit out of that. It's work, just like anything else. It's not very easy to do, to be quite honest. But once you get into this space, you can get into this space for free. Um, I always suggest people to get training before you do any of that. If you wanted to take that basic course there, it's available now for $49 just to get you familiar with it. But always get some training, because you just can't jump in and start doing it. So you got to have some kind of training. But yes, you can get into it for no money. I've seen notes as low as $5,000. I'm still green to the process, but I'm interested in putting this with our real estate business. I may need your basic course. Oh, great. Sounds good, John. Sign up for that basic course. It's available now. If you have any questions, let me give you my contact information. It's there. There's my email. So if you guys have any questions, my email's there, website's there. You can contact me. And I think that's going to wrap it up. Unless you guys have any more questions. All right. Thanks a lot, guys. Thanks for attending. God bless.